Hey trader, Shane from GMT Futures and FX. Welcome. I'm going to take you through our training module here on our new strategy. It's called the F trend, and this system has been developed purely for our pro traders. So obviously another strategy we've put together to help you get the most out of the markets and obviously keep that winning momentum going. So I'm going to take you through a couple of the different setups in the strategy, and we're going to talk a little bit about, and I'm going to give you some demonstrations of the actual trade setups in the live market as well, or in the market, and we're going to have a look at how those trades set up. We'll probably use crude and gold as examples. So let's jump in and have a look now at our F trend system and strategy. Alright, so the first thing we want to do is learning our T1 buy setup. So basically what I've done with this system is I've broken down the setups in what I call T1, T2 and T3. So the first setup we're going to look at is our T1 buy setup, because there's a number of different setups in this strategy. So this is specifically looking at how we get into this actual trade. We're going to obviously look at a chart which has got a much bigger screen than the one you can see there on the right hand side. But the criteria for a buy setup, the first thing is that price needs to move a minimum distance. So it needs to move a minimum distance between support and resistance, because if you've used the trend trader, you'll know that we've got dynamic support resistance. That's really the catalyst for this trade setup. So on our F trend, we basically want that dynamic support resistance. That's the key part of our trade entry. Now, we also need to make sure that price breaks support, because obviously we're looking for a buy setup here. So price needs to break support and print a white candle. Now remember from our trend trading video and our trend that when we get a break of support, then we're going to get a white candle, which is indicating that we've got energy in the market, then we've potentially got a trend. There is a maximum move here on the trade once we break that support level. So we're going to talk a little bit more about that as well. Because remember, if you break support and you're getting into a short trend and you're getting a short setup on the trend trader, you don't really want that to move, say, 50 or 100 points, because the idea with this strategy here, this F trend, this T1 buy, is that we're looking for trades that fail to, they're a failed trend setup. That's really the concept here. We're looking for trades that are failing to break out in that direction that are potentially setting up. So the other thing we're looking at here, price needs to trade back through that support, closing above the original white candle to confirm the buy setup. So I'm going to go into the charts now and show you exactly how that looks. So let's jump in and have a look at our T1 buy setup. Okay traders, so what we're going to do first is we're going to put the indicators that we need for this strategy to work. So we're going to go in, and I've already prepped the chart up a little bit. So the first thing I want is the Bollinger Bands. I'm going to put those on the chart. I'm also going to put our moving average on the chart as well, because that's one of the indicators for us to be getting into a trade, and also it helps to measure momentum in the market and trend obviously too. So we'll put our moving average on there. We're going to put our paint bar, support resistance and take profit. They're pretty standard features within a lot of our strategies, so we'll put those on there as well. So what you're going to end up with is you're going to end up with a cluster of 5 indicators that we're going to use for this strategy, and that will just help us to. Now, the other thing we need is our TP, so we'll just add that in now. So our TP is basically for our trailing stop more than anything. So we'll put that in. Now, the way this system sets up is that we need, as I mentioned before in the introduction, we need a minimum move. Now, the minimum move is measured between support and resistance. So it's nice and easy. We're not worried about a swing high, swing low, any of that stuff. We're looking for our dynamic support resistance. Why do we do that? Because we need to make sure that we're getting enough movement in the market for us to take a trade. Because remember that if we put a trade on, then we're looking for 2 to 1, 3 to 1, 4 to 1 or better. So when you're looking at your strategy, you definitely want to be tracking at 2 to 1 or better on this system. Now, you can use it as a kind of a scalping type strategy, but ideally what you want to do is you want to use this strategy to capture the 2, 3, 4 to 1 potential trade setups. So having said that, obviously if you've got a stop value, that stop value needs to be a minimum. That the move that you're potentially going to needs to have a minimum, say, of 2 or 3 to 1 on that stop value, just to make sure that you've got the potential profit there. So the minimum move here to set this trade up, I've selected I want a $150 move between my support and resistance. If I get $150 between support and resistance, I'm pretty happy. It shows me that I'm not trading in this crappy choppy area here where there's very little price movement. You know, got $40, $50 price move between that support resistance, $57 there. That's not really enough. It's not going to cut it. I want to see about $150. So it's going to be a bit selective, obviously. Now you can, in the strategy, you can dictate how much or little you want that move to be. My personal opinion is that the testing is going to back this up, because remember we're always objectively testing our strategies, that you want to have a larger move with your entry. So the minimum move needs to be, for me, is $150. It's between support and resistance. Once I've got that, then I'm good. I'm great to take a trade. So we really need to see this price bar setup. That's the first part of our strategy setup. So we need price needs to break that level, and it has done that. It's broken and set up our sell. So in our other strategy, the trend trader, for us to get into a trend setup, we need to see a white candle. Well, we've got that. There's our potential. So there's our potential sell setup on the white candle. But remember, this is the T1 buy setup. So we need this to play out so that we're getting a failed trend setup for us to take a trade. So let's have a look at how that plays out. All right, traders, so we've got our sell set up there on that white candle. Now, we don't want this trending setup with our white candle to move any more than 0.5 or 50 points, because that means that it's in a trend, and we don't really want to be looking to take a counter trend move. So we're going to have a maximum move, and that's 0.5 on that trade. Now, on every trade that sets up, obviously the trader is dictating how far they'll accept as far as a move on the failed trend. So this failed trend move is got to be under 0.5 for me. And then what happens is we're looking for price to trade back through that support line. You can see there the support. Price bar trades back through, and then we get our close above our setup candle. So price needs to break this level. That the high of that white candle, that needs to be broken, and we need to close above that level. We've got that there on our, you can see just there is our setup bar. So that's actually our setup bar there. Now that's where we get into the trade, because we've broken the previous high of our initial sell setup, and we're in the trade now. So basically it's saying that, well, this was supposed to be a short trending setup, a sell setup, but that failed. So the whole concept of this strategy is that it's a failed trend, and that we're taking price, we're running with price in the opposite direction. So I'm going to put on our MACD indicator just to help us out a little bit here. We had them on previously. I'll just put those on again. So we'll put our MACD on. There we go. So once we've got, now the other thing to get us into the trade, we need to have the MACD Bollinger Bands on our side as well. So they need to be green, and they are. You can see we've got green dots on our MACD. So that's a confirmation of a yes for me to get into this trade. So we're definitely getting into this trade now. So we're on and getting into this trade. And now we have to have an initial stop. Whenever we go into the market, we need to have an initial stop. Now that initial stop is either a set value that you nominate, or it's either going to be just off that swing low. So the swing low is just here. We might have a couple of ticks just below that as our swing low, or we can set a value based on our initial stop. Now, once we've got our initial stop in place, we're protected. You can see it there, and we have multiple trailing stop options, but we also have multiple target options as well. So we can have a situation where we get out on when the MACD goes from green, which it is here, to red. Now, obviously, we don't want to. We need to see the price move a certain distance before we do that. And for me on gold, I'm wanting it to move, roughly I'm wanting it to move at least 150. I'm wanting it to move the value of the setup. So if I've got 150 there, once price moves to that 150 level, I'm getting, if I lose my green dots, I'm getting out of the trade. So you can see I've lost my green dots there. So basically then I'm out of the trade, and that gets taken out around about there because it closed. There's the high. So because that's a cyan candle. So that's a $210 profit on that trade. Now there's a number of trailing stops we're going to use. We can use our TP, and everyone should be fairly familiar with our TP trailing stop, which is our little green dots. Now we never have our stop right on the green dots. We always have an offset below the green dots, so that would be our TP on our long setup. You can see price pushing up there, just keeping us in the trade. Our other stop we can use is support. So there's our first support there, obviously the main support, the initial stop, and then our next level of support, which is where our stop would go to, would be up the top here. You can see, and I'll just move that down. There's our next level of support there. Now the only trouble with that is that support sometimes takes a while to print. So you've got a fairly significant move here, and you've still got an initial stop in place. So I would like something a little bit tighter. So I usually like, my preference is either the TP stop or even the moving average stop. See the moving average we have here? You can have price running just below that. So you've got a few options there, or alternatively you could have the swing low stop. So your swing low might be sitting, say, here initially, then the next stop would be, the next swing low might be here, and then we may have then the next level swing stop might sit around about there. So as soon as these levels get broken, you're out of the trade. But remember that depending on what your profit target is, whether it's a set value or you're using the MACD take profit, you may get out a little bit earlier than that. So it depends how you want to play your gold trade and how things play out as far as your selected stop. But that's basically the buy setup. So it's very simple. It's, as I mentioned before, it's a great strategy to combine with your trend trader. So I'm looking forward to seeing our traders using this strategy, and particularly applying it with the trend, because it's almost a natural hedge on the strategy you've already got that's doing really well. So yeah, very much looking forward to seeing how that plays out. So that'll wrap up our T1 buy setup, and looking forward to taking you through the T1 sell. Cheers. Thanks for joining us today, traders. If you'd like to become part of our team in 2014, all you need to do is contact either myself or Luke at info@gmtfutures.com, and we can get you started pretty much straight away. So if you've always wanted to become a professional trader and you want to start using a high performance automated system, then definitely send us an email, info@gmtfutures.com or shane@gmtfutures.com, or you can either give us a call at 617-336-00875 and we can get you started straight away. So any questions, feel free to send them through. Otherwise, have a fantastic day, and I look forward to catching you on the next update. Cheers.